What's going on, guys, and welcome back to another very exciting video. We are going to be doing a free cash flow analysis for Meta stock, and this is one of my favorite stocks in the stock market right now. It is absolutely insane the valuation that this is sitting at. We can see right here that it is sitting at an 11.03 PE ratio, which is crazy. And I think some of these numbers that we are going to look at here today are very interesting, especially if you're thinking about buying Meta stock. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As you can see from the chart here, Meta stock has been beaten down in a major way over the past year. The stock was at around $375 a little over a year ago, and now it is sitting at $115, which is absolutely insane, the move that it has made over the last year. And it's even crazier when you actually look back in time and see that in 2016, the stock was sitting at a similar price to where it is today. And that is very, very interesting, because later in the video, we are actually going to take a look at the cash flow that Meta made in 2016 and compare that to where it is at today. So stay tuned for that at the very end of this video. But overall, again, it is just very interesting how far this stock has fallen in such a short period of time. And the number one reason for this decline is Meta is pumping an extreme amount of cash into the metaverse. They are trying to be the number one player in VR headset sales and in that market, and they are competing with the likes of Apple, who is supposed to announce their headset in 2023, and Amazon, who is also in the VR headset market. Let's go ahead and jump into our free cash flow analysis, and we have a few different models that we've ran. So let's start with this one, and this is basically the basic model of looking at the past 5 years and using the cash flows over the past 5 years and trying to determine what a price per share or a valid price per share is for Meta stock. So right now we have 2.26 billion outstanding shares. This is just pulled from Yahoo Finance. The average free cash flow is 23.36 billion, and that is pulled from these free cash flows over the last 5 years. So you can see we're starting in 2021 and going back to 2017. So we will get into 2022 in a later cash flow analysis, but basically you can see they had Meta had an amazing year in 2021. So they had $39.12 billion in free cash flow, and then 2017 they had 17.48. And again, those are pulled from Yahoo Finance. Down here, you can see in the financial section, cash flow and the free cash flow, they have the numbers down here. And then we also cross-validate that with macro trends. And you can see, again, those free cash flows listed here. So with those numbers, we get an average free cash flow of 23.36 billion. We have a margin of safety that we want factored in of 10%. That's where we're kind of comfortable at. And then our average free cash flow, basically this 10% number, it just reduces our average free cash flow by 10%. So we now have an average free cash flow with the margin of safety factored in of $21.02 billion. And then we are requiring a rate of return of 10%. So with those numbers, we can come to a market cap of $210.24 billion. And again, that's just calculated by taking our average free cash flow of $21.02 billion and dividing it by our 10% required rate of return. And then with that number, we can actually calculate a price per share. So all we're doing there is, again, taking our market cap and actually dividing it by our shares outstanding to come to $93.03 as a fair price per share based off, again, our required rate of return and our margin of safety. So obviously that number is well below the current stock price, right? We're sitting right now around $115, and this is saying that it's actually worth $93. One thing to keep in mind when we're doing this analysis is we are requiring a rate of return of 10%, which is relatively high. If we lower this number to 8%, you will actually see that number go up to around where we're at right now, which again, 8% is 8 to 10% is where you expect kind of the market to be at. But what you really need to keep in mind is this is a 10% return from the cash. So basically what we're stating is if we spend $10 on a stock, we are expecting that stock to return to us in free cash $1. So that would be, again, a 10% return. And that would be a very, very good business, right? If you could put in $10 and get $1 back into a business, that would be absolutely excellent. So that is a good return when we're looking at numbers like this. 8% is obviously a lot more realistic, but when you really think about these numbers, even 4 to 5% is really not a bad number. So we are being very conservative when we're looking at this 10% number. So a lot of people are projecting that Meta will continue to lower its free cash flow. Right now, we have seen them fall in a major way over the last year. Their free cash flow has decreased, not only due to their increases in investments in the metaverse, but also because of the economic situation throughout the world and throughout the US. And what we can see is we have changed the numbers here for this model. So we have reduced the free cash flow to 18 billion. We have basically projected where 2022 will come in at. I'll show you here in a second where we're getting that number from, but we have $18 billion in free cash flow. And then we're projecting a decline of 5% year over year for 5 years, all the way out to 2026. And with those numbers, we get an average free cash flow of $16.29 billion. We still have the same margin of safety. Again, still the same shares outstanding, still the same required rate of return. And then with that margin of safety, we actually have an average free cash flow of 14.66 billion. So with all that, we actually get this number of 64.86, which is far lower. Again, this model, in my opinion, is very, very, very conservative. I will actually think we will have a lot higher number than this $18 billion in free cash flow. And the reason for that is if you come over here and look at their free cash flow so far this quarter, in Q1, they actually had $8.761 billion in free cash flow. And then in Q2, they increased that number all the way up for the year to 13.429. So almost a $4 to $5 billion increase just in Q2, which again is not a great quarter just because people aren't spending a whole lot. And then Q3 was an even worse quarter, and they only had a $300 million increase, which they invested a lot of money into the metaverse over that quarter. And what we tend to see is that in Q4, we actually see the largest increase. So last year in Q4, they actually had a $13 billion quarter. And then even if we look back to 2020, they actually had a $9 billion increase in their free cash flow over Q4. So really what I've done is I've taken Q1, I took half of it. I said, let's just say they have a terrible quarter and they only do 4 billion in free cash flow. Then maybe we see this number, increase to around $18 billion. So that's where that 18 number is coming from. And again, you have a very small number here. So this is half of where the current stock price is at. But if you look at it and you say, okay, if we're fine with a free cash flow, basically we say, okay, Meta could pay out a 5% dividend and the stock price, wouldn't change at all, then you would actually see this number double. So if we require a rate of return of only 5% now, and again, you could assume that that's just a dividend being paid out and the stock were to sit at $129.73, basically, again, you'd only have a return of 5% year over year, but the stock price would right now be valid at $129.73. So that's a little bit higher, maybe 15% higher than where it's at right now. So you'd actually, on average, over the next 5 years, actually have closer to like an 8% return when you consider, the stock appreciation from where it's at right now and the 5% return that you're getting from its free cash flow. This final projection that we have is basically very similar to the last one, but the difference is we are saying that we are actually projecting growth over the next 5 years. So with this, we are saying 2022, again, we are around that $18 billion in free cash flow number, and we're projecting that in 2023, we would basically stay level. That's saying that right now Meta is earning a certain amount of money and they are using that money to funnel it into the metaverse, and basically their free cash flow isn't going to change, and their projections, how much they invest into the metaverse, isn't going to change in a very significant way. So they're maintaining that over 2023, and then after that they get back into growth. So they start getting 15% growth year over year until 2027. All these other numbers are basically staying the same, again, besides the free cash flow and the free cash flow after margin of safety. And with that, we actually get to a price per share of $96.66. But what is very interesting is if we come in here and we change this required rate of return. So again, this free cash flow analysis, in my opinion, the free cash flows that we're projecting, I think they're fairly conservative. I think, this is not out of the realm of possibility. So if we change this required rate of return to something that is, on the lower end of the market, basically the market, the S&P 500 returns somewhere around 8 to sometimes 11% based off, what time period you're looking at. So if we go down to 8%, which is, on the very low end of the market, basically if people are projecting a recession, then really this isn't a terrible projection. So if you go down to 8%, you are actually seeing that a fair value right now of Meta stock is $120.83. So that is very interesting when you look at the current price of $115 and basically comparing that to $120. So, only 3 to 4% difference in there. But again, there's still a lot baked into these numbers, right? We are projecting that Meta is going to continue investing into the metaverse. If for some reason they pivoted away from the metaverse and decided to go back to their business, we saw that their free cash flows were much higher than these numbers. In 2021, they had $39.12 billion. And in 2020, they had $23.63 billion. So if they kind of got back to this 23.68 or $63 billion, and then basically tacked on 15% growth to that number, we would see these numbers be vastly different. Again, we can even plug that in, 23.63, and see that the projection would run all the way up to $158.62. So again, very interesting there. If we lower this down to 10%, we can actually see that it gets closer to our current value. And then 11%, that gets us right at where we're at. So basically, based off this projection, if we actually saw Meta pivot away and get back to kind of the numbers that we've seen and get back to a very, consistent amount of growth, then we would actually have a required rate of return or a potential rate of return right now of around 11%. So as I mentioned in the intro, in 2016, we saw Meta stock trading around $115. We can see all the way back here in kind of spring, summer of 2016, it was trading around $120. And that is absolutely insane because we have gotten back to that number now here in 2022. And if we look at cash flows, we can see that in 2016, Meta actually only brought in $11.6 billion. So they did have a lot of growth, and people were obviously pricing that into the stock at that time, pricing in that they were projecting growth into the future. But, right now they're sitting almost double that number. They're sitting closer to probably around $18 billion in free cash flow for this year, and potentially even more than that, depending on how their fourth quarter number comes in. With all of that said, I do own Meta shares. I do love the company. I think long term that they are going to get things figured out with the metaverse. I think there's a lot higher potential. I've talked about it in previous videos. I don't think it's about VR. I don't think it's about virtual reality. I think their long-term vision is about augmented reality. And I think that is what's going to pay off in the long term. So overall, I do like the company. I like where it's headed with the metaverse. I do own shares. But with all that said, do not listen to some random guy in the internet. Go do your own research. Look into companies that you like. If you like the company and think it's at a good value, then buy it. If you don't, then do not buy the company. And remember, you are buying companies. You are not just buying a stock. Looking at a chart doesn't tell you a whole lot. You have to look at the fundamentals underneath the business. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.